Yes, good morning, students, and welcome to the class of SAP. Good afternoon, students, and welcome to the class of SAP. Good afternoon, sir, and a warm welcome to you, sir.
Good afternoon, ma'am. Thank you.
Yes, sir. You may please start the session, sir.
Sure. Ma'am. Yeah. So, students, welcome back. So, we had just before we had our lunch break, we were talking about. We had just got introduced ourselves to what is asset accounting and what is the nature of assets that we are going to talk about. What is the nature of assets that we are going to deal with? So, I said we are going to deal with fixed assets only. Okay. Fixed assets only, right? And when we started the topic, just like any, we started finance, we started AP, we started AR. Everything has a master data or the master records which needs to be created in the system. Yeah. So it all starts with the creation of the individual master records. And as far as the asset accounting is concerned, we have the asset master data or the asset master record being created and is called as asset class in SAP. Just like you had your general ledger account master being referred to as the chart of accounts, right? Similarly, your asset master records is referred to as your asset class or your asset classes in SAP. So as far as your asset accounting is concerned, this is the first concept which you need to be exposed to. Clear? Now, as a part of the standard SAP system, what were the earlier standards we saw? We saw the standard company codes 0001, 1000. And does somebody remember what was the standard chart of accounts? INT, if I can brush up your memory. Your default or your standard chart of accounts as a part of the standard SAP is referred to as your INT, is denoted by the code INT, International Chart of Accounts. Now, as a part of the standards, SAP has already provided you with the standard asset classes. You have land and building, plant and machinery, furnitures and fixtures, and vehicles. Also, something very, very interesting. You have something called as, if somebody is aware of this, assets under construction. So there is a special asset class being actually delivered in SAP called as your assets under construction. Also, concept called as LVA. What do you mean? Low value assets. Now, what is AUC? What is LVA? Assets under construction. Now, let me say my business is into real estate. I construct apartments. Okay, my business is that. So what happens? I take up a project of building, say, apartments and consisting of, say, 100 flats. Currently, I am working on a project on one apartment, and in that apartment, I need to have 100 blocks, 100 flats. Whatever it could be, 2 BHK, 3 BHK, 4, whatever. I'm not worried about that. Now, I'm just telling you the concept of AUC. Now, the concept of assets under construction is, will my 100 flats be completed in one financial year? Let me assume a scenario where I'm following the April 1st to March 31st financial year. Now I take up my apartment building work, say by August or even September 2025. will I be able to complete the construction of 100 flats by March 31st, 2026? It may not happen. Invariably, it will not happen. So what do? I need to complete the creation of the asset after its completion. Apartment is my asset, and the individual flats, they are a part of the assets. Now, when I'm constructing the flats, I'm incurring various costs. Let us say I purchase steel rods, window panes, cement, jelly, paint. So all this need to be finally capitalized when I complete my apartment. Don't you agree? So till that point in time, my apartment is not an asset. Only when I complete, when I start selling the individual flats, then I can recognize my apartment as a asset. You agree with me? So now what happens? My apartment construction is still under process, assets under construction. This is the typical concept of asset under construction. So now each expenditure, expenses what I incur during the process of completion of building up my asset, the process is treated as AUC in SAP. So I am collecting all the expenditure in one AUC, and finally I'm transferring all this expenditure to the completed asset. What is my completed asset in my case? The apartment, which is consisting of 100 flats. That is my final asset. You agree with me? So this exactly is the concept of your AUC, assets under construction. Yeah. Now, even there is another interesting concept called as LVA, low value assets. Now, according to the legal books, according to the company's law, whatever assets you are procuring of a value less than, I think it is 5,000 rupees or 10,000 rupees. I'm not very sure. So under a specific value, they need not have to be depreciated. Clear? They need not have to be depreciated in the financial year. I can treat them as a P&L account. I can treat them as the expenses and capitalize them in that particular year itself. I can take it as a cost. I can absorb it. This is your low value assets, where less than a specific value of an asset, I need not have to capitalize. I can as well consider it to be a profit and loss expense. If you want more clarity on this, whenever the topic comes up, I will explain that in detail. Clear? So why I was giving you this example, one of the very most important aspect as far as asset accounting is concerned in SAP. It could be HANA, it could be ECC, whatever. Now, just like the receivables and the payables, they ultimately touch the finance module in the form of a reconciliation account. Your asset accounting also talks to the finance module by way of the reconciliation account only. In this concept, the concept of integration itself is the process is referred to as account determination. So simply said, the whole concept of integration is held through a concept called as your account determination. Okay. So what is account determination? If somebody asks you, it is nothing but how the integration, the inter-modular or the intra-modular. Now the concept of integration between FIAP, FIAA, FIAR is within the modules. Your integration between your finance and purchase, finance and sales, finance and human resources, they are all the inter-module. Integration happening between different modules. Even these concepts, they happen through a concept called as your account determination. So what is a typical life cycle of an asset? You create the asset master record and you start the asset accounting activity by means of acquiring the asset, buying the asset from the market. Suppose you are buying a new plant and machinery for your production activities. Suppose you're buying a new vehicle for your director or a head of the department, whatever, or you're procuring land, you're purchasing a building for your business. Correct? So these typical buying of the asset is referred to as your asset capitalization or your asset acquisition, or simply said, it is your purchasing of an asset. Asset acquisition. After the asset acquisition, as per your legal books of accounts or as far as your legal requirements is concerned, you need to subject all these fixed assets to a process called as depreciation. By depreciation, what information are you getting? Okay, you are subjecting the process, you're subjecting all the assets to the process of depreciation to arrive at the current value of the asset. Because over a period of use, the asset is subjected to a lot of wear and tear. Perfect, your typical textbook definition. Whenever the asset is subjected to the wear and tear due to the usage, the value of the asset also comes down. The value of the asset drops. So to arrive at the correct value of the asset, you should subject the asset to a process of depreciation. You agree with me on the depreciation? What is depreciation? Perfect. Now, for what else do you depreciate? What is the other information that the top management gets from the information about depreciation? It is one of the most potential areas in your finance or in your balance sheet where you can adjust your profits. Yeah. Okay, let me just bear this point in mind. Now, what is the other critical information from the costing side that you may get from your depreciation? Can you just think over it for 2 minutes and get back to me with the answers? You're all studying CMA, right? So what is the critical information from the concept of depreciation that a CMA looks forward? Think about it for 2 minutes. I'll come back. Any thoughts on this? As a costing professional, what is it that what information are you looking at from the depreciation? One is you're knowing the perfect value of your asset. All right, the current book value of your asset, you're able to know. And what else? Take 2 minutes, come back to me if at all you have any answers. The book value of the asset, is that what you mean? The balance cost left after depreciating asset? The book value of the asset. All right, perfect. Yeah. What else? Date and method of depreciation. Method of depreciation applied. Okay. But why do you require this information? It is all the desired process. You know the value of the asset, the method of whether it is written down value, whether it is straight line methodology, whether it is special depreciation, whatever. From when are you starting the depreciation activity? Everything agree. What other information apart from this? Tax component, okay. Tax savings and depreciation, okay. Okay, this is another information. What else? From the costing perspective, what else? Two more minutes, okay. I'll give you 2 more minutes. Think about it. All what you said is perfect. Okay, useful life, okay. Perfect, right? After that, loss or profit on sale, okay. Market value of asset, okay. I'll wait for 1 more minute. Now just tell me if my point is logical enough or not. Now I am producing a product. I have paid money to buy the plant and machinery, and I'm producing the goods using that plant and machinery. Budget and planning, accumulate, okay. Cost control, okay. This cost control is a little okay. It's a very broad term, very broad term. I'm not able to. Carrying cost. What is a carrying cost? Now, if I'm producing an article, yeah, depreciation is non-cash expense. That's perfect. Your depreciation is always a non-cash expense. Perfect. Now, how do I fix the selling price of the product? Don't you think the depreciation also should get into the cost of the product? I buy a plant and machinery worth 10 lakhs and I can produce 1 lakh components, and you get the depreciation per based on the rate of depreciation. You get the percentage of depreciation spread across the 1 lakh items. Am I right or am I wrong? Now tell me, at what price should I sell this item? Shouldn't that 10 lakh rupees and the depreciation, what I provide, shouldn't it also form a part of your product? You agree with me? Can somebody please say yes or no? Cost of production. Perfect. So this area of depreciation gives you or gives the management a very, very critical information as to what should be the costs of the product so that I can fix up my profits. Absolutely. Selling price decision taken on the basis of perfect. So you agree with me? So this also gives you, it's not only the legal requirement. So once you procure an asset, once you capitalize the expense, you need to depreciate. Apart from that, these are all the critical components, critical information, which the information of depreciation provides to the top level management. Clear? So when at the end of the life cycle of an asset, when I want to scrap or when I want to carry out the process of retirement of the asset, how SAP is treating that. And when I sell the asset, am I selling the asset at a profit or at a loss? So these are the concepts in asset accounting as far as SAP is concerned, or normally also, nothing new. Now, let us go through the document if we can find some other interesting terminologies. So we are okay with this term, asset master record. Yeah. Now let me just check if there is. So let's read the notes section also. All right. So let us just try to stick on to this cost center, because this is what we are going to see when we talk about. Of course, we are going to look at internal order also. OK, may not be much of WBS because it is the concept is a little different. Cost center, internal order, yes, both are the basic, or rather the heart of your management accounting module, where you define the cost centers as a master data in your management accounting. So what is a cost center? Simply said, it is a department. It is a department in your organization. Clear? Now, as far as your asset acquisition activity is concerned, we set up the SAP system in such a way that you have the transaction must definitely, or the user who's entering the transaction must definitely also mention the user department, or the department which is the owner of that asset. You will understand slowly as to what I really meant by this statement. OK, just hold on. Let me move on. See, we are aware of what is an asset class. Just like you had a classification of your GL account, your vendors, your customers, same way you categorize your assets into different asset classes. Yep. So we have all got used to this: building, machines, furniture and fixtures, AUC. Yeah. So you have standard asset classes already provided by SAP. Yeah. And you also have, we also now know what is AUC and LVA also. I think you would be the best people to tell me more about LVA, right? I'll come back to this asset sub numbers maybe a little later. All right. It's as simple as this. So I'll just give you I will just give you very small information as to what is an asset sub number. Now you join a company. OK. How does a company identify you in a unique way? Through your employee ID. Similarly, you identify the assets used by your organization. It could be your chairs, it could be your tables, it could be your air conditioners, it could be your whatever, your laptops, your desktops. Okay. So each and every asset is identified by, now you have a unique employee ID, which identifies you as a unique employee of the organization. So you may be having so many employees with the same name, Ramesh, or say Deepak, whatever. There could be hundreds and hundreds of Deepaks in your organization, hundreds and hundreds of Ramesh in your organization. So how does the system identify one Ramesh with another Ramesh or one Deepak with another Deepak? It is by generating the unique employee IDs. Similarly, if I have 100 chairs in my computer department, the computer department becomes the owner cost center or the owner department. The 100 chairs is identified by a unique asset number. So you have the concept of asset main number and asset sub number. Now let us say you have purchased 100 chairs for your computer department. Your numbering of the assets starts with, so the first chair will get the number 1000-1. The second chair will get so on till all these are chairs. Can you see that they are identified by the main number 1000? Only the sub number changes. So only in asset accounting, you have the concept of the main and the sub asset number, main asset number and your sub asset number, only in asset accounting. So instead of identifying the assets by a single number, you have sub numbers also. 1000-1, 1000-2, 1000-3. The main asset is the same. Can you see this? The main asset is 1000, which is a computer chairs, I'm assuming. Okay. And this is how I have asked the SAP system to behave. So like this, I have identified all the 100 chairs by the concept of the asset main number and the asset sub number. Was this concept clear? Okay, now see, combined asset typically not used in Europe. So it depends. And why not used in Europe? It is their methodology. All right. So now can you see? This is important in certain countries, for example, US. All right. The concept of your asset sub numbers, main number into sub numbers, they are typical to maybe say certain geographical locations. AUC. We already know the concept. Did you understand this? The standard depreciation key. Don't try to understand what is the depreciation key, but did you understand the concept? Because the asset is not completed, there is no concept of depreciation. When we are talking about AUC, since the asset is not completed and the asset is not being used, there is no concept of depreciation. That is why it is zero depreciation. So as of now, you can simply say depreciation key 0 is zero depreciation. What is depreciation key? Another key term in SAP asset accounting. Can you see this? Depreciation area, depreciation key, what they are, how they look like in SAP. All this we will discuss. Clear? So you can see the explanation of foreign asset class once again. Please read them through. Okay, let me read through what is. Let me see if I have missed something. So it becomes very mandatory that each of the assets what you are procuring for your organization must and should belong to one of the asset classes. It should either be a real estate, it should either be a building, it should either be a plant and machinery, it should either be a vehicle, it should either be a furniture and fixture. Clear? So however, in whatever way your organization is breaking the asset class or the nature of assets what it is procuring, right? It must have a definite asset class. It must belong to one of the categories. Yeah, that's what the statement says. Account determination. Are we aware? What is account determination? All GL accounts. That is all. There ends the explanation. Simple as this. You are talking about the integration by way of the general ledger accounts. And this concept in SAP is called as account determination. Nothing more, nothing less. Yeah. Now, a very important concept. So just around 2 or 3 slides ago, we saw depreciation areas. Correct? Now, what is the use of depreciation areas? Now, the information as regards the assets or as regards the depreciation can be useful or can be generated at various different levels or for various different purposes. The need for evaluating the or understanding the organizational requirements as to why you want the depreciation information is called as depreciation areas. So somebody rightly said tax purposes, your costing purposes, your balance sheet purposes. These are the typical reasons as to why you would require a depreciation area. Yeah, different business reasons. Yeah. Everything boils down to the same information. That's it. You always mean the same. However way you read it, these different fixed asset valuation views. The valuation view, that is how you want to view the depreciation, is referred to as a depreciation area. So in SAP, you have the concept of activating or deactivating the depreciation areas. The different ways any business organization wants to get the information about depreciation or wants to analyze the concept of depreciation. This is your depreciation area. Clear? So slowly see how we are moving on. There is another concept even before we start all this. Chart of depreciation. in SAP, you do not have the concept of creating your own chart of depreciation. On the other hand, you have the standard chart of depreciation already provided by SAP, and the standard chart or charge of depreciation is identified by the code 0DE or 1DE. Why 1DE or why 0DE? Why those names? SAP standards. This is all what I can ask. Why? While creating your own chart of depreciation, you must create a copy of the standard only. You do not have the concept of creating your own chart of depreciation. You need to very well follow the standards. Why DE? DE in short represents to Deutsch, which is German. Yeah, so that is why this is called as your standard chart of depreciation Germany. Okay, so you can create a copy of the standards and then start working on the standards. You do not, in SAP, any standard or any professional follows one golden rule, which is you do not directly work on the standards provided by SAP. In the sense, you do not directly enter transactions into the standard company code 0001 or 1000. They are just models based on which you learn SAP and you build your structure as per the standards. And as far as the standard chart of accounts is concerned, you create a copy of the standard chart of depreciation, and in the copied version, you add or delete the general ledger accounts, what you need or what you don't need. You do not directly work on the IND chart of accounts. You do not delete or add any new general ledger accounts into the standard chart of accounts INT. You can create a copy and you're most welcome to add or delete the general ledger accounts in whatever you have created. But you do not, or rather we follow one principle as to not to disturb the standards. Clear? Now, I don't know how far of this statement, whatever the concept which I'm going to tell you, you're in a position to understand and appreciate. This point, what I said, you will never disturb the standards, is simply because there are so many instances where you may not be able to resolve certain issues in some projects, especially in your management accounting area. Okay. Now, we have faced this. One of the typical examples, whatever I'm telling. So some of the errors, despite having discussed so many times, despite getting in touch with so many consultants, we may not be able to provide or resolve the issue. So what do? After putting in so much of efforts, we approach SAP. All right, we approach SAP to take up this issue virtually. In the sense, we hand them over the issue and also virtually hand them over the SAP system of our project also. Now, what SAP does? SAP goes into the SAP system, understands how the system has been set up, and in some cases, if they see that you have disturbed the standards, they will stop supporting that project. In the sense, they will not be responsible for providing the solution. They simply say you have disturbed the standards and we cannot do anything about it now. So this is the seriousness. So that is why whatever the consultant is developing, he needs to be extra cautious as to not to disturb the original setup as done by SAP. And this is so very applicable to sensitive areas like that of your CO module. No doubt it is wonderfully designed. Your CO module is a wonderful thing offered by SAP, but there, even if there is a slightest slippage, and if they come to know that you have disturbed the original SAP setup, they will refuse supporting that system. You may or may not be in a position to understand whatever I said now, but this is the criticality. Just know the bottom line is please do not disturb the standards provided by SAP. So what are the standards that we have seen? Company code 0001 or 1000, chart of accounts INT, fiscal year variance, K4V3. Yes, we have seen we have understood what the standards are. Yeah. Like this, and one of the other standards is your chart of depreciation. Yeah, you have the standard 0DE or 1DE. Yeah. Yeah. So now I think we have understood what a depreciation area may not be. I mean, you may not be, if I ask you a question now, what is a depreciation area? Please tell me. You may not be in a position to give me the complete information, but at least as far as the understanding of the concept is concerned, if the subject of depreciation area has gone in conceptually, I'll be more than happy. Clear? Understanding cost elements in SAP. Okay, since this concept of cost elements have already come in, I will tell you what this is. But students, how is the topic building up? Interesting. Interesting. You agree? Asset accounting is one of the most critical areas in your finance. Okay. Did you find something in?
Sir, right now there are no questions such as, but I have posted the reply of the previous question which you have asked.
Okay. All right. Thank you, Kunal. Now just trying to ask them how the session is going on as far as the subjects today are being discussed. How do you feel the topic today? Or maybe saying, how do you feel the subject is going on, students? You agree with me as we are spending more and more time to understand the SAP system. More and more things have to be understood conceptually. You agree with me there? Excellent. Thank you. So now moving on. Understanding cost elements in SAP. What do you understand by cost elements? and how SAP understands what is a cost element. Now, you have the concept of allocation and apportionment in SAP, in costing, right? So whatever costs, okay, it says click on the plus button to learn more. Fine, fair enough. Mandatory fields. So the general understanding of cost elements is that it is called as the primary cost elements and your secondary cost elements in SAP. See now, if how do we normally break open this primary and the secondary cost elements? Now, there is an expense of say 200 rupees. If I'm directly able to identify this specific owner department, which is responsible for spending the 200 rupees, I can assign it to that particular item. I can apportion. Now, there will be some cases, typically, let us say you are paying salaries to your organization, employees. Now, can't I differentiate how much of salary I have paid to the production department, how much of salary I have paid to the HR department? Can I do it? Obviously, I can. So I can easily identify the cost, the expenditure as regards salary is concerned in SAP through the concept of primary cost element. Because actually I wanted to take this up when we talk about the CO module, but since the concept has come up here itself, we will talk about the cost elements. Primary, easily identifiable. You have the concept of secondary cost elements, not easily identified. Easily identifiable, not easily identifiable. Now, these primary cost elements, they are defined as your individual general ledger accounts in your chart of accounts. Simple GL accounts. Simple general ledger accounts in your operational chart of accounts. And this is the way it is through the primary cost element that your finance module talks to the CO module. Yeah. What is the example of secondary cost elements? Cost which cannot be easily identifiable to a specific cost center. Like say, your utilities bill, your water bill, your power bill. Can you identify easily? Can you immediately identify how much of the power has the power department consumed? What is the value of the power spent in the HR department, in the finance department? Can we do that? It can be done, but it takes a lot of effort. So costs which cannot be easily identifiable, they flow through a concept called as your secondary cost elements in SAP. Simple definition, that is all. All right. So you have concepts like distribution, allocation, settlement. So we will see that a little later. If at all the things come up, we will have a look at it. All right. So basically, your cost elements is this. All right. I think because he had to explain the cost center, he has brought in this. Okay. Cost center is nothing but the owner department. Clear? And as far as the asset is concerned, if I'm buying a plant and machinery for the production department becomes the owner cost center. Clear? So let me also put in this even before I put in the cost elements. What are cost centers? Individual departments in an organization. Cost centers can also be called as cost collectors, cost buckets. Okay, they are responsible for collection of costs. We'll come to it later. Okay, not a problem. So now he comes back to the asset master record. Let us see how he is breaking open the asset master record. General master data. Oh, it's not moving.
Sir, there is only one question. If you can check it out once.
Sure, Pranay, I'll do that. So these are all self-explanatory. All right. So just hold on for the depreciation key, which is going to be my next topic. Let me just take up the question. Okay. So what is a depreciation area? Now, the function of depreciation is only one. Correct? Now, what are the reasons for which I want this information? So providing depreciation is one of the basic requirement of your company's law. Your book depreciation is as per your legal requirements. Second one, it could be a very good information for my costing purposes. It could be a very, very critical information for my taxation purposes. So the purposes for which you would want to analyze the concept of depreciation is called as your depreciation area. Am I clear? How you want to say the depreciation is one activity? Perfect, correct. But how does your organization want to analyze that information is you can break it open by way of depreciation areas. One area could be your book depreciation area. The other could be your costing area. One more area could be your tax area. Yeah, I hope you have understood why you would want to require depreciation areas. Did you understand the concept of depreciation areas? I hope it is clear. All right. I hope the concept of depreciation area is now getting a little clearer. Yeah. So it is just how the organization wants to analyze the information of depreciation, how it wants to use the concept of depreciation. Okay. And what areas. Yeah. Why do I want to? How do I want to analyze the concept of depreciation? Yeah. So I hope you are able to now visualize. May not be, I mean, I'm not expecting you to have understood it in and out. Because conceptually lots and lots of things have to be understood, especially when you are talking about a little complex or a module in assets. Okay? Asset accounting is always considered to be a little more complex than the other sub-modules, but understanding it conceptually should make things little simple. And the ultimate understanding you will know only when you start facing issues and only when you start working on that specific module. And this is a huge module. Your asset accounting module is as big as the whole finance module itself. In terms of understanding, it is a little bit more, I wouldn't say very difficult, very complex, no, but it is a little different from the other submodules. Okay. All right. So what is a depreciation key? Depreciation key or keys. The most important thing is it contains critical information as regards the method of depreciation and percentage. So each category of asset legally should have different percentages at the rate it is getting depreciated. If one kind of an asset is around 10%, the other asset type is 33%, 33.33%. Your laptops, your computers. So different category of assets, they are based on the company's law. They are being depreciated at different rates. So where is this information defined in SAP? Firstly, the method of depreciation and the valid percentage of depreciation is the most important information what the depreciation key has. I hope I was clear. This concept of depreciation key, the depreciation key has more and more and lots of other informations, like say, are you subjecting the asset to the shift working? Is it working in 2 shifts? Is it working in 3 shifts? Is it working in only 1 shift? So based on that information, the depreciation also increases. The depreciation also increases. So all this information, it is provided in the structure called as your depreciation key. I hope you understood. I'll just pause for 2 minutes, allowing you to just absorb whatever has happened. Again, understanding will take some time. Don't bother. Don't worry too much. All right. Just hold on and take a breather for 2 minutes and try to digest whatever has happened, at least the terminologies. If you are comfortable with the terminologies, I'm more than happy. If I explain the terminology more than once or twice, you will understand the term conceptually also. That should not be a problem. I'll pause for 2 minutes. In the meantime, take a breather. 2 minutes.